I'm Alan Kenny, Editorial Director with REIT.com, and we're in Washington, D.C. for NAREIT's Washington Leadership Forum. Joining me is Jay Leupp, Managing Director with Lazard Asset Management. Jay, pretty strong year in 2014 for U.S. REITs. Still have room to run in 2015?
Alan, good to see you. 2014 was a very good year for REITs. Real strong performance pretty much across the board in the U.S. property sectors. We do think there's still room to run, and I'll tell you why. We don't think rates are going to rise as much as most pundits. We do still see very strong real estate fundamentals. That is limited new supply with continued demand. And we still see rent growth and earnings growth tracking ahead of inflation. In our view, this adds up to a pretty good year for REITs. We're thinking maybe in the 10 to 15% total return range.
Let's move to Europe. One of the big stories internationally right now is the Greek bailout. How's that affecting your outlook for the European property markets?
Well, we are invested in Europe. We do actually manage a global platform and a fund family that invests both in Europe as well as all over the world. So we see this issue with the Greek bailout and potentially a default as a potential risk to investing in Europe, particularly with the countries that have large banking establishments like Germany that lend into Greece. Although we're starting to see a pattern with these types of situations, and where there's a lot of negotiating, a lot of posturing, threats of default, threats of not extending new credit, and ultimately both sides realize that they need each other. The Greeks are major consumers of German products and other European finished goods, and also Greece is a tourist destination and a producer of some raw materials, that the two sides actually need each other. We do not see the Greeks exiting the EU, and we do actually see an extension coming. So what we try to do is take advantage of that volatility to the extent there is some. So if we see weakness in certain European property markets that is resulting from news out of the negotiations with Greek borrowers, we try to step in and be buyers in those types of instances. Ultimately, we do not believe that these negotiations and an eventual bailout, which we think will happen, will affect the European property markets.
That's the big story that everybody knows about right now. Give us one that maybe is a little underappreciated or under the radar.
Well, internationally, there's a few different areas that we think look really interesting to us. We like Hong Kong right now. Hong Kong really sold off along with the broader Chinese property markets and equity markets, and the two obviously are part of the same country and are interrelated, but Hong Kong really is a unique real estate market. Super high quality assets, super high quality tenants, almost permanent demand, and a very, very strong institutional investor base that's always looking to invest in Hong Kong. So we like valuations in Hong Kong. Moving across to broader Asia, we like what we call emerging Asia. Emerging Asia, we believe countries like the Philippines and Thailand, Indonesia, Malaysia are all very interesting to us. We in particular like the dynamic that we see in the Philippines and democracies that are continuing to grow that aren't really subject to broader Chinese influence and any downdraft that economy may have on the broader Asia-Pacific market. So that's the second one. We do actually like some markets in Europe. We see some bargains in Scandinavia, particularly with the fall in oil prices. Some of those markets actually have traded off in sympathy. We still like parts of London, even though asset prices are more expensive. That's another market with permanent demand. And then back in the western southern hemisphere, although it's technically not in the southern hemisphere, we like Mexico as well. And we think that that's a very good, strong market, kind of lives in the shadow of some of the larger Latin American markets, but we're seeing nice economic growth in Mexico. We're seeing renewed investor interest in Mexico. We're seeing political stabilization in Mexico and increased investor demand in Mexico. So that's also a market that we think over the longer term is going to be very, very exciting for investors. So essentially we see four areas that look interesting around the world outside of the United States.
Jay, thank you so much for your time.
Great to see you, Alan.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.